All right, let's move on. Let's come back to what's taking place in Europe. Yannick Naud is a portfolio manager at Glendevon King Asset Management. Yannick, perfect day for you to come and visit with us here in the studio.
Yes,
welcome.
Thank you very much. Thank you very much.
We've seen some huge moves, to say the least, with regards to what's going on in the banks especially, and in the insurers as well. And it's all down to the worries about whether or not these institutions have enough capital, first of all, and whether or not they're going to get wrapped into a contagion story if we see things get worse.
It could get from both sides. I mean, banks have exposure to sovereign debt. And in the case of Italy, it's very likely that the Italian government will kindly ask a few Italian banks to try to buy their own paper.
Yeah.
So it will come from both sides, because when you have the third biggest economy in Europe trading at almost 6% yield, the problem is not bank anymore, it's really the Eurozone.
And what should Italy be doing now then? I mean, we've also heard some reports, the FT had a report indicating that Berlusconi and the finance minister could be at loggerheads with regards to a couple of issues there. That's since been denied. But if the third largest economy in Europe really runs into trouble, whether it be with debt or whether it be with banks, it's not going to bode well for the rest of Europe.
Yes, there's two things. There's in the short term and in the long term. In the long term, the austerity package of Mr. Tremonti is going in the right direction. I think we're talking about 40 to 45 billion euro of saving in the next few years. Most of the saving are coming in 2012, so it's a bit too late. Nevertheless, it's going in the right direction. Tactically, today, there's been a lot of people selling short government bonds. I will not be surprised if, as for the stock market, where the consub want to know who is the short, if there's some pressure from the government for bank and insurance company to stop lending their bonds. I will not be surprised about that.
Well, we've seen huge pressure on the insurance sector this afternoon. I mean, off something like 5% here just a few minutes ago. How much wider do you think, though, that the Italian-German yield spread can go?
But technically, I mean, if we look at what's happened in Ireland, Spain, and Portugal, when the yield reached 7% for 10-year yield, it became impossible to borrow money in the market, and therefore there must be a bailout. There can't be a traditional bailout for Italy because it's just too big. It's the third biggest debt issuer in the world. 1.6 trillion euro of debt. The Europe alone or the IMF alone will not be able to step in.
So what happens? I mean, how, you know, I'm kind of pinning my hopes to precisely that they might be able to step in and make sure that this is, you know, contained and stopped or unwound in an orderly way.
I think the market is willing to accept the effort of the government if there is the real effort and real austerity package starting today. Italy did start. It might be not enough. Other countries, like France, for example, even though there will be election next year, will need to start the same effort. Because France have much lower net debt to GDP amount, but in terms of budget deficit, it's much worse.
Okay. Yannick, thank you very much for coming in to talk to us this afternoon. Yannick Naud, portfolio manager at Glendevon King Asset Management. Much appreciated. All right.